Buckle up because I am about to save you potentially tens of thousands of dollars. And no, this isn't some clickbait promise. This is the real deal information nobody's telling you about. Let me paint a picture. You spent decades carefully saving, planning, dreaming about retirement. You've got your nest egg, your plans, your dreams, and then bam, the tax man comes knocking, and suddenly those carefully crafted plans look like a house of cards. It happens too many times. Retirees losing money not because they didn't save, but because they didn't understand the tax game. If you're having a hard time figuring it out, trust me, you are not alone in the confusion. Let's break down the top 9 tax mistakes that could absolutely decimate your retirement savings. Think of this as your highlight reel, your quick and dirty guide so you can make smart money moves. Want the deep dive? Check out my full retirement planning playlist. Each of these mistakes gets its own full breakdown over there. Mistake number 1, the required minimum distribution trap. Ever heard of required minimum distributions? No? Well, buckle up. At age 73, the IRS basically says, thanks for deferring those taxes. It's time to pay up. Here's the brutal truth. If you don't take these required withdrawals from your traditional IRAs and 401ks, the IRS will hit you with a penalty so massive it'll make your head spin. First, they will charge you the regular tax owed on that distribution. Then they're going to add on a 25% penalty. So altogether, we're talking a potential 50% tax on the amount you should have withdrawn. Let me say that again, 50%. That's the IRS saying, oops, you forgot? Well, we'll just take half. Mistake number 2, the withdrawal waltz. Not all retirement accounts are created equal. Your traditional IRA taxed as ordinary income. Your Roth IRA typically tax-free, but many people treat them like they're the same thing. I knew a guy, a brilliant engineer, terrible tax planner. He would randomly pull money from accounts without thinking. Some years he'd accidentally pushed himself into a higher tax bracket. It's like watching someone light money on fire. The smart move is strategic withdrawals. Mix and match your accounts. Pull from taxable and tax-free sources strategically. It's like financial yoga. Balance here is key. Mistake number 3, a Social Security surprise. Here's a gut punch most people don't see coming. Your Social Security can be taxable. That's right, after years of paying into the system, the government might still want a piece of your check. If your income crosses certain thresholds, up to 85% of your Social Security benefits could be taxable. It's like getting a bill for a party you didn't even want to attend. President Trump is talking about changing this, but right now, this is our reality. Quick gut check here, and I want you to be honest. How much do you really know about your Social Security and how much it will be taxed? Drop your thoughts in the comments. Mistake number 4, the state tax roller coaster. Where you retire matters, and I mean it really matters. Some states are retirement tax havens, while others will nickel and dime you into oblivion. Florida, Nevada, Texas, no state income tax. Massachusetts, California, New York, they'll be sending you love letters with dollar signs. I've seen retirees save more in tax simply by moving states than some people save in a decade of working. It's not about running away, it's about being smart. I've created a video all about this topic and I'll link it here. Mistake number 5, investment ignorance. Your investment strategy should not and cannot stay the same in retirement. What worked when you were 35 is financial suicide at 65. Tax loss harvesting, strategic asset location, understanding how different investments are taxed. This isn't boring mumbo jumbo. This is the difference between a comfortable retirement and constantly watching your bank account stress you out. Mistake number 6, the conversion conundrum. Roth IRA conversions can be brilliant. They can also be a total nightmare if you don't understand the tax implications. One wrong move and you could trigger a massive tax bill. I've seen people convert their entire traditional IRA to a Roth and then get hit with a tax bill so large it negated most of the conversion's benefits. It's like trying to save money by buying something on sale with a credit card and then not paying off the balance at the end of the month. I've created a video that discusses Roth conversions, and I'll link it here for you to check out. Mistake number 7, charitable giving blind spots. Here's a secret weapon that most people don't know about: qualified charitable distributions. If you're over 70 and a half, you can donate directly from your IRA. This can reduce your taxable income and potentially lower your Medicare premiums. It's like finding money in a coat pocket you haven't worn in years. Except this money comes straight from smart tax planning. Mistake number 8, healthcare chaos. Medical insurance and expenses in retirement aren't just a health issue, they're a tax issue, especially if you are receiving or want to receive tax subsidies to help pay for your ACA plan. Understanding income limits, medical expense deductions, and the tax implications of healthcare spending. This is where the real money is saved. Mistake number 9, estate tax ignorance. Even if you're not a multimillionaire, estate tax planning matters. Your heirs will have to pay taxes on some types of accounts, reduce taxes on others, and no tax on other types of accounts. So how you structure your assets can save your heirs serious money or cost them a fortune. Here's the deal. Tax planning isn't a one-time thing. It's not something you do once and forget it. It's an ongoing process that requires attention, strategy, and sometimes a professional. If you don't feel confident doing this on your own, that's okay. Find a tax professional who specializes in retirement strategies. Not Bob, your accountant, who does your taxes every year. I'm talking about someone who lives and breathes retirement tax strategy. There's a difference. If this saved you money, if this made you think, if this felt like someone finally pulling back the curtain, do me a favor, like and subscribe. It really helps the channel grow. For the full in-depth analysis of each of these tax traps, head over to my retirement planning playlist. I'm creating dedicated videos that break down each of these mistakes with specific strategies, real-world examples, and actionable advice. If you want to go from tax confusion to tax confidence, that playlist is your roadmap. See you in the next video.